What's going on, everybody? This is Economic News Insights, and today we're going to talk about how much money do you really need to get started investing. And I will tell you right now, the short answer is going to be as little as $1 you can start. Now, the things that you need to know when you're getting started in the stock market or getting started with Bitcoin, you usually need to plan out your goals. So whenever I'm doing goals or setting up plans for there's a book. It's called Think and Grow Rich, right? And one of the exercises in there, he says, write down what it is that you want from life, and then write it down right after that what it is you're willing to give in order to get what you want out of life. So if you apply that to, say, finance, what is it that you're looking to achieve with the markets, Bitcoin, or any sort of asset class, gold, silver, Forex, bonds, whatever you're getting into? But you need to know that there's a short-term strategy. So this is your, say, 6-month plan or your 1-year plan. And then you have your long-term plan, which is your 5 to 10-year plan, or you could say your retirement plan. So it depends on your financial goals. Are you looking to build wealth? Are you looking to earn a passive income? Are you looking to get retirement? I would imagine, being that you've probably never invested before, you just want to get started. That's one of the biggest things, right? Like, um, what do they call that? Not persistence, but pessimism. Pessimism is the enemy of all success, right? So you don't want to be pessimistic. You want to be thinking about how you can get started, right? You don't want to be pessimistic because you realize that you're never going to be successful if you never get started. So the first thing is just getting started. So maybe putting in $50, maybe putting in $100, and putting it into something like Tesla or Apple or Google. Once you do that, you can watch the price action on that. Let's just say you put in $100 in Apple, and after a month, it goes up to $110 for your balance. Okay. Then you see how the price action actually makes your investment value go up or down. And that's that initial getting started. Then you can say, well, okay, I want to put a little bit more into this. And then we talked about this on this channel recently. It's called dollar cost averaging. If you haven't watched this video, you can actually go back and watch. But dollar cost averaging is basically every single month you put in $100, no matter what the value of the asset is, whether it's Bitcoin or Tesla or Google, and you just invest every time $100, and $100 goes into whatever asset you're looking to buy. Or maybe you're trying to invest in the S&P 500, right? So you could invest in the NASDAQ, something like that. Now, another idea is building an emergency fund. Have at least 3 to 6 months of living expenses saved before investing. They have this saying, never invest more than you can afford to lose. Obviously, no one tries to go into an investment thinking that they're going to lose or hoping that they lose, or even having that on the radar that they're going to lose their money. But anything's possible when you invest, right? It's like you could buy a car today and something could happen to it. You could buy a house and something could burn down. I don't know, something like that. But never invest more than you can afford to lose. That's why they say having 3 to 6 months of living expenses saved before doing the investment. Now, as far as getting started with an account, this is one of the most asked questions that I get all the time. Where do I start? How do I invest? What do you use? Well, I'll just say right now, I use Robinhood. I put a link in the description to make it easy so you can go straight there and sign up. And it's an affiliate link. I get a credit for it. Hey, use the link that I set up. You can sign up with Fidelity. You could set up a hub. I have both of those. Some people use Webull. I have an account with Webull. I don't trade on Webull. Nothing against Webull. I know a lot of people who do. I also have an account with Public. I have a little bit of money on there. I don't have a lot on there, but Robinhood. I also have an account with JP Morgan Chase. The reason I use JP Morgan Chase is because it's easy to send money from my bank account to that brokerage account. So that could be easy. You could also use maybe Robo Investor or retirement account. You could set up an IRA, like a Roth IRA, a traditional IRA, a rollover IRA, or you could set up a 401k because those have long-term tax advantages. There's a difference between a traditional or a rollover IRA versus a Roth IRA. Some of them have benefits that will benefit you in the short term. Others have benefits that will benefit you in the long term. Thank you to everyone who's smashing up the likes as we continue to get this video out to everybody. I know it's early in the morning in the US. It's late at night over here in Asia where I'm at now, but I wanted to get this video out there just because I get a lot of questions about this in my personal account. Even people on here asking the questions. Pick what to invest in. So you got to find out what it is you want to invest in. Do you want to do ETFs? Seems like ETFs, S&P 500, NASDAQ, really kind of right out of the gates, easy to get started with. And it's a strong asset class. Standard & Poor's 500, the top 500 companies in the stock market. It's pretty basic. NASDAQ being the tech side of it. You also have other assets you can invest in. But index funds, you could just pick a stock. I don't know. Tesla seems like a solid stock long term based on all the things that I've been hearing lately. But we'll see what ends up happening. And so if you do an individual stock or asset like Bitcoin, that could be something cool. Now, you could also pick dividend stocks. They don't go up in value as much. They won't have a crazy gain where they go from $300 to $400 like a Tesla would in a week or two, but they do pay dividends. Now, typically with that, you got to have a lot of money invested. Putting $100 into a dividend stock or an ETF like that, you're not going to see any real value coming out. We're talking a couple pennies, okay? So it's usually one of those things. Someone who likes dividend stocks is looking for a very conservative play, but they also have a lot of money. We're talking like hundreds of thousands or millions of dollars invested, and then they get like a nice little passive income off of it. Now, you could start small. Like I said, you could start for as little as $1, but I would say if you're going to do it, at least put $50 or $100 in there, and then just stick with that dollar cost average over time once you get some experience with it. The big thing is getting started, getting experience, getting pushed around, getting shoved around, not really paying too much attention to the short-term volatility as much as you're just trying to like get your hands in the cookie jar and see what's going on. You're trying to feel it out, right? And then you can use free tools to learn using ChatGPT. You can learn from YouTube videos like mine that I make on this channel. If you're new here, you can watch our YouTube videos as we continue to navigate the waters together. You can go onto Investopedia and you can, listen to podcasts, audiobooks. One of my favorite audiobooks is Trading in the Zone. I wouldn't recommend any of you beginners get into trading or futures trading or margin or even Forex in the beginning. I would say just pick something very straightforward like an ETF or stocks or Bitcoin and just stick with that. Don't get too cute with it. And then you can track your portfolio using apps like the Finance app on the Apple phone or Yahoo Finance or Google Finance, Seeking Alpha, Morningstar, something like that. But the big thing is with investing, again, take a long-term perspective. Think about how long you can tie up that money. Don't get into it and just hope to get quick gains. Investing is not something that you're going to get rich overnight. It can happen, but typically it's one of those things. It's like growing a lemon tree in your backyard, right? The first time you plant the lemon tree, it's not going to just start popping out lemons, right? You got to water it. You got to fertilize it. You got to protect it. It's one of those things you just got to kind of nurture it and watch it grow over time. And then it starts yielding, its cash crop, which is going to be the lemons, right? Because if you take a short-term perspective, excuse me, my goodness. If you take a short-term perspective, with every drop or volatility, you're going to panic and you're going to want to sell. That's called panic selling. And most panic sellers that you ever talk to, they always end up regretting it 5 to 10 years later because all they would have ever had to do was just hold on to that position. Unless it's a terrible position, some some stocks go to zero. They just completely, the bottom falls out from underneath them. That's why it's important to get into like the top tier. Like in the stock market, they have the Mag 7, the Magnificent Seven. I mean, that's Nvidia, Microsoft, Google, Apple, Meta, Amazon, Microsoft. Those are like the ones that pretty solid long-term holds. You're not going to get crazy rich off it, but you get good exposure, and you're not gonna lose all your money. The likelihood that you're going to lose money on those is very small based on what we've seen previously, right? Anything can happen though. Now, I would say avoid any sort of like chasing. You don't want to FOMO. You don't want to have fear of missing out where you're chasing it at the pump it starts pumping and you buy high when it's on a pump. You usually want to buy when it's down low in the red. So don't get into like meme stocks or emotional decisions. Like don't get into something that you saw on Reddit. Try to avoid that kind of stuff. Don't put all your money into one stock. As time goes by, I would say diversify a bit. Maybe have a Tesla, maybe have some Amazon, maybe have some Microsoft, something like that. That's usually a good strategy. Maybe have a little bit of exposure to the ETFs like the S&P 500 or the NASDAQ. And then if you get into dividends, what I do, I just reinvest. So as they pay me out, the compounding growth, I just say reinvest it. I don't really try to pull the money out. I don't want to have to take in more of a tax liability than I need to. And I just reinvest it. So these are the things that I would say are really good for beginners getting started, investing in the market. That's really what you need to know. Let me know what you guys think. This is our investing podcast. We do live streams with that. Thanks to everyone who likes the video, and we will see you on the next one.